Hey guys, you're tuning in to howtoplaystock.com. My name is Casey. Today is December 4th, 2017, and it is 9:20 a.m. Central Time. I'm going to give you a brief update on the markets here. The Dow Jones is at 24,528 points. We're up 296.56 points at the current moment, and the market's just opened. So uh, the markets continue to go up, and as I've talked about in previous videos, I think what we're seeing here, in our face, is a market melt up. And if you're not familiar with that term, go ahead and hit the subscribe button. Subscribe to my channel. You can go back and watch a couple videos that I have in my playlists where I talk about what exactly a market melt up is. But that's not the reason for this video today. Today I want to shoot a video on a interview that was taken just recently with Warren Buffett. Okay. Before I get started, though, let me just give you an update on the S&P 500. That's 2,658 points, and the Nasdaq at the current moment is 6,837 points. The S&P 500 is up 16.19 points, and the Nasdaq is down roughly 8 to 8 points. Okay, so we'll go back here to the article about Warren Buffett. This is from CBS News, and the lady that interviewed him is her name is Jane Pauley. So a couple things that I found interesting about this article, and I've heard these before from Warren Buffett, but if you haven't paid attention to what he has to say in some of his interviews, I'll just summarize it up here for you pretty quick because he says pretty much the same thing in all his interviews. And it's the same thing that a lot of these other investing tycoons will tell you in their own writings, like in their own books. Carl Icahn, Kyle Bass, who's a expert trader. You got guys like Bill Gross, Ray Dalio, Jack Bogle, the founder of Vanguard. Let's see here, who else? John Templeton. Uh, the list goes on. I could keep naming people all day long, but they all say something really similar to what Warren Buffett says, and that's you have to achieve emotional stability if you want to build wealth for the long term. Because most all these guys are going to tell you that about 97% of the time you're not going to be able to time the markets 100%, which means that if you're planning on trading your way to wealth, you're going to lose, and chances are you're probably going to lose a lot of money because most people are not expert day traders, and even the day traders on Wall Street themselves will admit that you know number one, they're not trading with their own money, and if they were, they wouldn't be doing what they're doing. Okay, and that's in the writings of some of these guys that come straight from Wall Street. And all you have to do is pick up a couple books and start reading, and you'll find out pretty quick what your odds are when it comes to beating the markets year over year, long term, as a professional day trader. So you want to achieve emotional stability for the long term. Now, how do you do that? Well, Warren Buffett's got a strategy that he uses, and that strategy revolves around the baseball analogy. Again, if you're not familiar with this, subscribe to my channel because I go in and I explain it to you. And I got that off of one of his documentaries um, that I watched, just recently. But it's really interesting because it doesn't require, as he says in this article, it doesn't require that you've got 150 IQ. Okay, and he said, if you're in my business, go sell 20 or 30 points to somebody else because you really don't need it. He said, you need emotional stability. You need to be able to detach yourself from fear or greed when that prevails in the market. Okay, and I've been saying this too in my own videos. And again, this isn't solely based off of what Warren Buffett is saying. I'm just pointing it out that he is coming out and saying it once again here. Uh, in regards to the baseball analogy, he says it's like baseball. I get to stand there with a bat on my shoulder and I wait for a fat pitch. And if the pitcher's throwing them high and outside, I just keep waiting and waiting and waiting. So in other words, what he says here is you really don't need to invest in 100 different individual companies to try to beat the markets. All you need is to know your circle of competence, and I talk about this as well. So if you're watching this for the first time, again, subscribe to the channel, go back, watch some of my videos, my playlist. You can also take my investing course that I have, which is in my description below. It's completely free, and I go in and I explain some of what he's talking about here in further detail for you, and lay it out in a plan which you can follow. And it's basically built upon the shoulders of giants, guys like these, like Warren Buffett. So yeah, he basically says exactly what I've been saying. You got to have emotional stability if you want to build wealth for the long term. Uh, you need to get in the markets. That's the first thing you need to do. One of my really good friends, best man at my wedding, um, I was talking to him the other day, and he said the best advice you ever gave me, Casey, was to get started. Because as long as you're sitting on the sidelines and you've got cash, you're really not getting any type of return off your cash. Okay, cash doesn't give you anything. If you go to a savings account and you open a savings account, put your $1 million in there, or whatever, how much more, however much money you have, you're looking at a return of point like 0.003%. Okay, that's ridiculous. You're not building wealth that way. So what I'm saying here is don't sit on the sidelines. You need to get in the markets, period. Um, let's see here. He says, nobody gets, Paulie said, nobody gets rich peddling papers, do they? He said, well, I delivered about 500,000 papers and I made about a penny each. So it was about $5,000 I made. I had a pinball machine business, I had a car polishing business, and I had a stamp approval business. I had a lot of different things. Did you have a long-term plan at this point? He said, I was just having fun doing these businesses and buying stocks with the money that I earned from it. So again, here, he's saying, if you got something right now that you're creating money with, it could be a day job, a business, whatever, uh, you know, take advantage of the money that you're making. So start making a compound for you. Um, and she asks him here, can you sum it up in terms that I would understand? Because he also talks about reading books. He said, I've read hundreds of books, one in particular, The Intelligent Investor by Benjamin Graham. Now, I've read this book too, about 3 or 4 different times. Man, I can tell you right now, it's a hard read, but once you get through it, it, you know, it's pretty easy to understand. And so she asks him here, can you sum it up in terms that I would understand? He says, it really says that a stock is a piece of a business. If you buy a piece of a good business and somebody's running it for you, and they're honest and able, and you pay a reasonable price, you're going to make a lot of money. So, if you've listened to some of my videos, I always say it's not necessarily the stock you invest in, but what are you paying for that stock? And you've heard me talk just in the last few months about things being overvalued, right? Well, if they're overvalued, you're not going to make a lot of money. Now, that tactic or that strategy, that type of approach works better for people who are trying to time the markets, okay? Because you can make a lot of money that way. But if you're doing this for the long term and you have time on your hands, specifically time on your hands, just get in. It doesn't matter what price you're at, especially if you're investing in stocks that are, here he says a piece of business. I would say if you're investing in stocks that are, the broad markets, okay, so indexes, because the indexes have a basket full of these businesses that he's referring to, and they're the best of the best, okay, they're the cream of the crop. So if one decides to start taking on water in its ship, you don't really have to worry because, you've got 20 of these ships sailing across the ocean. Okay, that's the analogy I'm going to use here. So you really don't have to worry too much because if it does sink, then that business can be replaced in the fund or the overall broad market index that you're in by another company. And you don't have to worry as much. Again, it helps you with the emotional stability that he's talking about here, and just staying in the markets long term. Okay, that's all I have for today. I'm not going to cover this whole article because this video will go extremely long. But if you like what you're hearing here, go ahead and hit the like button, subscribe to the channel, check out that investing course that I was telling you about. It's in the description below. I left a link for it for you. It costs nothing, so if anything, you're just going to educate yourself even more, and it'll add to a lot of what Warren Buffett is saying here. But this comes from other guys as well, that are, net worth is up there in the billions, just like him. And you can build a plan and strategy based upon the shoulders of giants, like I've been talking about. So that's all I have. Hope you guys are having a good day. Go create a good day. And remember, income is the outcome, okay, guys? I'll talk to you later.